The GST Council has discussed possible goods and service tax rates. This includes government's proposals with no tax on essentials and highest tax on luxury goods, even as it reached a consensus on the payment of compensation to states.
How much tax will India pay from next year on essentials to cold drinks, cigarettes to radio taxis and watches? At the GST Council meeting on Tuesday, the Centre for the first time put on the discussion table at least 4 tax slabs.
The rate structure should be such that it does not lead to any further CPI inflation, and this has to be blended with only the least possible burden that has to be put on the taxpayer.
The Centre has proposed zero tax on food items and 50% items of common usage. Commodities may be taxed at 6, 12 and 18% standard rate. Luxury goods may invite 26% tax, plus a cess on ultra-luxury items like foreign cars and watches. But that's a contentious issue. Post-GST, some items may cost more, some less, depending on which slab they are fitted to. States like Kerala want luxury items at 30%, while UP says, go ahead, tax more what's less needed, like cold drinks.
Well, yes, why not? Maybe. Yeah, I would surely agree, because you see, if something, so for example, sin tax, if something is something that we would like to deter from our economies, from the habits of the people, we want to tax it at very heavy rate, something like a cigarette, for example, something like tobacco, for example.
Cold drinks?
Let's see how it goes.
On other issues, the GST Council had a mixed day. There was no consensus on which tax should go to the centre or states, but consensus on compensation has broadly been agreed upon. States will get money from the centre to maintain 14% revenue growth rate for 5 years for revenue lost, when all India pays one tax on every item or service sold. In New Delhi, Rahul Srivastava for NDTV.